Aside from a few rare authors such as Mark Douglas who have not overdone the description of the ins and outs of trading psychology, this aspect of trading mastery is routinely misportrayed by the internet as some sort of a mystical new age notion that will single-handedly propel you into trading profit. Let's get it straight here. There is nothing magical about trading psychology that will make it a sufficient condition to trading success. No matter how much of it has been misleadingly made to look like it is about subjectively building up your inner self towards trading glory through some kind of a mind hack, almost all of it can actually be dealt with objectively through work and letting go of your ego. The following course is going to be brutal for a lot of viewers. I'm going to take you along the painstaking background process that I had to go through in taking an honest look at myself and my intentions. We will see how the steps previously reviewed in Series 2 are absolutely cardinal to make you succeed in this endeavor, and what signs you should look for to determine that you have made it to mental mastery. I won't be easy on you today. I'm going to tell you flat out what nobody dares to tell you for fear of losing subscribers, and I'm gonna make it personal. So get ready to be shaken, hang tight, and try to power through this episode until the end. You'll be happy you did. Claiming victory over oneself is the highest form of victory, and this should be your number one goal as you start building up a winning trading mindset. If you don't, soon enough you will realize that trading psychology has less to do with observing strict discipline in executing trades than it does taking ownership of your true intentions first. This process requires a grueling introspection that starts with doing the required shadow work on yourself and assessing your commitment with a ruthlessly unforgiving honesty. You see, claiming that you want to become a trader and make money as one almost always goes no further for most than fantasizing over the fake-ass trading lifestyle pictures plastered all over Instagram. And that would be fine if most of you left it there at the stage of the when Lambo wishful thinking. The problem is when you decide that that same wishful thinking is going to cut it to warp reality into making you a profitable trader. This is the trap where you will become your own worst enemy if you let your ego take over. There are no two ways to go about it. You must face the implications of the fact that you are no more special than the next guy, that no shortcuts will be made available to you, and that doing the same crap as everyone else is not going to suddenly work out for you just because it's you. You are not exempt from the same work and sacrifices that were required from those who reached the top, and you must dissolve that ego first, because the more hardened it is, the more the market will deservedly demolish you for it. And it is only logical. When productive work lacks, the only way for anyone to bridge their actual achievements with their ambitions is to straight up lie to themselves. If there is one thing that I have learned to not underestimate over the years in this industry, it is the seemingly unlimited capacity from retail to tell themselves delusional stories and believe them when it comes to both the way they trade and their abilities. Regardless of the flavor though, they all happen to revolve around the same common denominator, which is that unfounded egocentric belief that in spite of the absence of any quantified proof that their method works, as well as the absence of any long-term risk-adjusted performance reflected in their trading account, they somehow will magically manage to consistently convince themselves into profit by drawing on charts and reading patterns. That, in essence, encapsulates the crux of the retail trading delusion. Now don't get me wrong, I too started there. Most of us did. But unlike most, I broke that egocentric vicious cycle. My self-respect was enough to let the reality of my own nonsense make me snap out of it. Because I did the shadow work. I faced myself in a mirror and I vanquished the ego by admitting that I got duped, that I was wrong to believe it all, and that I needed to change and finally get to work. For real this time. Because unless I reversed course, the market was going to keep giving back to me just about the exact worth of the delusion that I was throwing at it. Garbage in, garbage out. Mercilessly. Every single time. And if you think that you can get around that shadow work, keep lying to yourself and get a positive outcome, then I gotta tell you you're in for a rude awakening. Because even if you don't, the market will force you to face your own bullshit regardless. It will force you by bankrupting you. Now, if you think that I'm making more of a fuss than there really is to it, I want you to look at this thread that popped on my video explaining why price action is worthless. Pause here and read it carefully and try to grasp the depth of the illogical madness. This right there is the archetype of what I'm describing and what I am desperately trying to make you avoid. A mind diseased by a calcified ego that's unable to think clearly and that will rather die holding up a lie than admitting to be wrong. So for your own sake, if you want to become a trader, don't be that guy. As I mentioned it in earlier episodes, trading is as close to a winner-takes-all scheme as it gets, and merely becoming consistently profitable, let alone making a fortune, takes a frighteningly high level of work, sacrifices, and commitment that I detailed in this video if you're interested to take a deeper dive into the issue. Link in the top right. What I want you to understand is that you will be put up against petabytes of competing analytical power, investment funds with nearly unlimited resources, and independent quant freaks like myself who live and breathe trading 24/7, year in and year out. That environment is going to be your competition. That's why you cannot approach the challenge in a half-baked fashion, listening to CNBC propaganda, drawing animal shapes on the chart, and hoping for a miracle to happen every day that Wall Street opens. Commitment should be assessed the hard way, both in the positive and the negative, meaning that you need to genuinely admit to yourself both what you are truly willing to put into it and what you are willing to let go of in order to make it happen. And I mean it in the long run, far beyond the pathetic instant gratification culture that keeps most new entrants grounded to the unbegun stage, hopping from one sensational clickbait trading video to the next. The stark reality is that most people are totally unable to align their actions with their initial commitments and attain that necessary level of self-honesty. The path to trading success is not achieved by casually browsing a trading forum. It's dry and lonely. It's hard, and most of you simply don't want to work hard enough. You keep lying to yourself that you do, but in actuality, in terms of measurable efforts and return on efforts, most of you are not willing to do squat beyond the soft and wishy-washy comforting chart reading BS that you keep telling yourself does qualify as work. So let me make it clear for you. Reading charts is not work. It is a feel-good, low-effort dumpster fire of an alibi for real work. That's why you keep losing money with it. And if you refuse to change and keep doing it, you're gonna keep losing your ass to people who actually did do the hard work that you keep refusing to do because somehow you believe you're exempt. You're not. If you're not kidding yourself about becoming a trader, you need to step up. The worst part is that this broad laziness even holds true when 99% of the work was done for you. Once again, if you think I'm blowing this out of proportion, please take a look at this 20-minute video where I literally gave away for free a completely functional trading system for cryptocurrencies. Mind you, some marginal work was required to figure out the parametric density of the system, but how many of you who watched it until the end actually bothered to code and verify it? How many of you decided that trading some parameters that looked okay was enough research to trade it live? How many of you prefer to revert to crayon drawings because coding felt like too much work? And how many of you even bailed before the end of the tutorial altogether? You see, I always joke that I could release my 15 years worth of quant research for free on my channel and people would still manage to not make money trading. The truth is, what most people truly want is to be airdrop money and not even have to lean down to pick it up. Whether you like it or not, that is the actual objective reality of the average trading mindset and commitment to the task out there. In case you need more proof, look at the average viewing duration for that trading system video. We're barely reaching a third in as of the time of recording this course. I'm not making this up, guys. That's about as close as it gets to the attention span of a small animal. And this work ethics can be found just about everywhere in trading forums. So much so that this low effort culture transpires in new lazy ass ways of asking for an explanation. Notice the sharp rise of the TLDR or even the so-called Eli 5 questions now? I have to admit I had to Google that one up to understand what it was that people were actually asking. And I couldn't believe what I read. Eli 5. Explain it to me like I'm 5. As in, I kinda want to understand, but I'm too busy scrolling on TikTok, so please hand me the trophy without having me run the race. That's the spirit of it in a nutshell. Like you're 5. Really? What, are you retarded? As I said, you need to invest yourself in what you're doing. Glossing over the surface just won't cut it. Now, besides calling out your own self-delusion and cranking up your work ethics, a third and last kind of parasitic type of mindset needs to be overcome to get your trading journey started on solid grounds mentally. And it's safe to say, a lot of trading newcomers have a truly prolific imagination when it comes to rationalizing their early failure, and especially they're giving up on trading altogether before they even truly start. Once again, it all revolves around your ability to stop lying to yourself and stop telling yourself urban legends that you couldn't prove about why it is that the work that you put in so far did not pay off yet. To put things into perspective, you need to be reminded that those who succeed in this business are not those who struck a trading edge after a mere few months. Those traders who succeed are those who did not give up and spared enough capital to trade another day. It personally took me years, not months or days like you can hear on social media, years of trial and error and getting my ass handed over to me to get there. But one thing I certainly didn't do is make up a feel-good charade in order to shift the blame onto something or someone else other than myself. And I bet you've all heard these same stories before. I lost money because the market is rigged and manipulated. Or small guys can get ahead in trading because only hedge funds can make money, because you need special information to make money in the market. Or I can figure it out because I didn't have the means to pay for a college education. Or my broker is colluding to manipulate the market against guys like me. Or you can't model the market into an equation because it changes all the time, so this is all pointless. I swear I could write a brick-thick comedy book about the pile of sheer nonsense most of you are telling yourself to avoid taking responsibility. Whether these stories are true or not is not even the point here. What matters is, can you still make money trading even if we assume that these stories are true to the full extent that you think they are? The answer to that is a resounding yes. Not because I say it is, but because I have done it for years. Let me rob you of your excuses now. I was raised in a typical white-collar family with zero connection whatsoever in the financial world. I went far enough into my so-called Ivy League education to become well aware that it was totally worthless in helping me trade successfully, so much so that I dropped out before going for my PhD. I kept grinding my way up to the point that now I can trade my own capital independently, alone, with my own proprietary algorithms, with nothing but the most public information since I only trade based on price. I avoid those screwed up brokers that would sell my orders to HFT firms, and especially, I take responsibility for my failures. I learn from them, and I immediately alter my process so that I don't do the same crap again. So let's recap and go back to what we reviewed so far. Before you even start, you need to make sure that 1. You clean your mindset by keeping your ego from interfering with your progress. 2. You need to commit not to spare any efforts and sacrifices to make it all happen. And 3. You need to take responsibility for every single one of your failures. This is not rocket science, guys. This goes for trading, but also for just about anything else that you want to undertake in life. What you need is courage. That's it. Now I have some good news for you. Once you get your head under control and you start putting some productive research under your belt, the topic of trading psychology will take care of itself and only gets easier from here. Why? Because it no longer involves creating a winner's mindset out of thin air like you're always told to, but rather capitalizing on tangible achievements to build up your mental strength and resilience. The reason why so many new traders place such an emphasis on psychology is because they lack the formal and quantified frame of reference to anchor their confidence in. And this frame of reference happens to be crafted and calculated objectively, not felt or imagined subjectively. That is why I spent so much time on the technical aspects of trading system design before tackling this topic of psychology, because I know firsthand that the latter cannot be definitively resolved without the former being laid down as its foundation first. If you carefully crafted your system alongside the risk and money management guidelines reviewed throughout Series 2, then keeping yourself in check to ensure a strict implementation of your trading plan should become a formality. Gaining a thorough understanding of the ins and outs of your trading system, its behavior and especially its risk profile, is the tangible data that will be used to build your confidence. What I want you to understand is that confidence is known, it is not dreamt up. No psychological strength can emerge from trying to convince yourself that everything is under control. You need to be able to rationally prove to yourself that everything actually is indeed under control in order to believe it. Not doing it first will doom you to failure. By relying on subjective patterns or lousy, heavily optimized strategies, it is no surprise that retail always falls victim to doubt after the first drawdown, which invariably results in poor discipline, poor execution, and losses. Ask yourself, if you have no quantified understanding whatsoever about the robustness of your method, then you will know it to be fragile, vulnerable to market shocks, and you will necessarily start doubting it, stressing out, and will stop trading it altogether at the first meaningful hiccup. Conversely, if you carefully crafted it at the mathematical level, then tested the proof of concept against a large sample of market conditions, and you learned the acceptable breathing room that your risk management and money management require, then you should have no problem with ups and downs. I can count 3 major telling changes in your mental approach that will allow you to gauge whether you get to that point of confident self-control as a trader. The first one is that you will finally embrace randomness to such an extent that you will register gains and losses with the exact same emotional response. You will merely see them as a fact of life of your trading system, and consequently, accepting that you cannot predict the market will become natural. As you maybe noticed it, at no point during this course did I mention fear and greed, which seems very counterintuitive when discussing psychology, right? That is because these are mere symptoms of a failed mindset. Embracing randomness means that you will finally stop stressing out over guessing the next trade. The notions of hope and doubt, fear and greed, FOMO and FUD that you used to be so vulnerable to will become irrelevant. You will no longer even try to so-called pick the best setups or guess which pattern looks best this time, because you will know that there is no such thing as a best setup. There is only the next trade to be signaled by your system, and especially, you will become ruthless about cutting your losses or taking your profit when your system tells you to. There will be no second guessing or trying to outsmart your system. Your ego will no longer be involved or attached in any fashion whatsoever with the outcome of your trade and the notion of being right. So you will simply focus on mechanically taking trade after trade in order for your system to realize its statistical edge through the law of large numbers. Only at this stage will trading become a stress-free operation. In fact, execution will and should become boring. At this point, you will become numb to it all, having lost any kind of sense of thrill or anxiety. You will just put your trades in and go on about your day. No more staring at the screen to babysit your trades for hours on end and develop a cancer over it. In very simple terms, you will make peace with randomness. The second big sign that you have reached trading maturity and that level of psychological mastery is that you will strike that balance of being just as rigid with the execution of your trading rules as you will learn to be flexible in your expectations. It is not easy to do, but it will eventually come naturally once your brain gets sufficiently trained. Soon enough, you will realize that quantitative trading requires spot-on execution to be profitable. Miss or screw up one trade, and you could miss that huge move that makes most of your system's profit for the year. As I often put it, getting it 99% right in trading is getting 0% right. So you must have it all executed flawlessly and be unforgiving about yourself in that respect, because the market does not hand out participation trophies, it only rewards achievements. Likewise, this mental rigidity will have to make way for a lot of mental flexibility in accepting extended periods of performance lulls where you will not be able to make money. For a while, you will feel a sensation of unfairness and not getting what you deserve. And that's fine, it's expected. Let the frustration sink in, then block it out. Learning to accept your drawdowns and embrace uncertainty is learning patience and acceptance that trading does not provide for a regular income, but rather a sharp, disseminated burst of profit. It's hard, because the human brain is wired to prefer smooth patterns, predictability, and security, and randomness contradicts that head on. But you can grow that mind muscle to make your trading mental strength that much tougher, and expand that strength over to handle many other tough life situations where that learned self-control will benefit you dearly. The last sign is when your frustration switches from making a loss to missing a trade, and that's a big one. At this stage, your whole focus as a professional trader should have shifted from the myopic obsession over your next trade's profit to the bigger picture of whether or not the process is implemented as it should be. And your only worry will become your replication quality, as in the percentage of performance that your actual trading is replicating versus the theoretical results of your quant model. I think it should be clear to you by now why I keep telling you that traders showing off how many screens they trade with are almost certainly nothing but social media noobs parading as big shots. Because the need to show off with fancy tools is a dead giveaway of a weak psychology that's desperate to compensate for a lack of genuine confidence. You do not need to multiply the sources of information when you have professionally done both the introspective and the technical background work that I described earlier. In other words, you do not need to rely on cop-out artifacts to do the conditioning and thinking for you. The reality is that there is zero substitute for that combination of destroying the ego and taking care of your quantitative work as you build up your mindset. No amount of gimmicky indicators, fancy trading setups, or new age voodoo mindset hacks can make up for it. As I said, there is only one way, starting with cold-blooded, bias-free hard work towards systematized and calculated expectancy. The mental game enters a virtuous cycle from there. Free thinking from a contained ego, original concept from free thinking, technical research from original concepts, knowledge from technical research, process from knowledge, discipline from process, results from discipline, success from results, and confidence from success. And I'll throw in a very last notion that nobody ever talks about when dealing with trading psychology. A lot of what will be required from you as a mentally seasoned professional trader is a cold, clear-cut, and calculated mind, sometimes bordering or overlapping some personality traits akin to that of secondary psychopathy. And you need to remember that you also have a life, and most likely a family around you. Trust me, it is very easy to let that all-or-nothing mindset transpire to other sides of your life if you do not watch yourself. So I'm urging you to keep that in the back of your mind as you progress, to train yourself to turn your empathy back on as soon as you turn off your screens. This piece of advice comes from someone who trades for a living and had to readjust his attitude in order to not forget to be human. So yeah, that will be my last tip. Trade hard, but remember that trading is not everything in life. There are people around you, so don't forget to be a human to them. So that will round up this episode about psychology. I am well aware that I had to drop a lot of unpleasant and uncomfortable truth bombs in this video, but evolving takes pain. and breaking away from your soft self to handle the tough reality of trading is not for everyone. That's why the prize is so valuable. So if you made it this far without rage quitting on me in the middle of this course, then congratulations, you're most definitely part of a small group. And now in order to finish Series 2, I will take you in our next and last episode on a tour where I will describe to you my typical day and practical routine as a full-time trader. I want you to know precisely what life you're choosing for yourself if you want to go down that path. So I'll see you in the next episode, and until then, trade smart.